Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. So in this video, I want to talk about something that I've been looking at for the last week, and I thought I'd just share it with you. Everyone has been saying the market is okay. The market's alright. There's nothing wrong with the market. It's gonna keep going up. Blah 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 blah. Yeah, look at what the market's been doing. Anyway, this article in Financial Review says short positions in the big four banks top $8 billion. Now let's just look at that headline here for a minute. If you look at the banks, if all the top four banks have put in in total $8 billion worth of short positions, and I'm pretty sure it's on their own stock of short positions, what do you think that means? Now the banks are smart, or they think they're smart anyway. So the banks are smart, and do you think if they thought that everything was going to be rosy and everything's going to be really, really good moving forward this year and next year, that they'll be pouring $8 billion into short positions? It says here that there are more than 8 billion reasons why offshore hedge funds want to talk to Australian traders about one thing only: the big four banks. It says here short positions in the banks have skyrocketed over 12 months and now worth more than $8 billion. Now the thing is that there's a lot of image here and stuff like that, and the thing is, guys, is I could read this whole article and go through it all, but the one thing I want you guys to realize is that when you start to get articles like this, that the banks are doing this, there is something out there in the market that's saying, hang on, this is just not right. Why do you think they're going to spend $8 billion on shorting their own market or shorting the stocks? Because they know something is not right out there. Of course something is not right out there. We know we're in a bubble right now. We know that the market has been going sky high right now. Like the Dow got to 18,000, and it's just absolutely incredible. And the thing is that we will start to see some big significant movement on the downside, and we're seeing this all over the place. Something is going to crack, something is going to happen, and we're going to send the market even lower. But the Australian market is actually weaker than the US market. We've been going down a lot longer than the US market has. US market's basically been sideways, really a big channel sideways for the last couple of months, really. So 3-4 months. So guys, this is just another reason why I'm saying that there is something not right in this market. I don't care what you believe. I don't care what you say. Something is not right in this market. We have so much stuff. Look at China. Look at So if you look at China, if you look at the debt bubble that obviously that the market's in. But people say, yeah, John, but that's in America. That's not us in Australia. Yeah, but you know yourself, right? Like, something's just not right. I read an article just recently based on the CDSs, the credit default swaps, and on the Australian market. And I read just recently that the credit default swaps, that they're getting to a point in the big banks where there's actually been putting a lot of pressure on the banks when it comes to their fees. That the credit default swaps are getting to a point where they're getting very close to the GFC in 2008. Now, I know this was an American thing, but that's putting a lot of pressure on the banks. Now, there's talks that the banks are going to raise rates because of all this pressure and all these excess now, basically bills and stuff like that they have to pay through the credit default swaps. And there's just a lot of things there. And as you know, there's credit default swaps and the subprime and all that sort of stuff, that CDSs and all that sort of stuff. That was one of the biggest things in America. So the rest of this year, guys, is really going to be very, very, very big. We've got, as of before, the CDSs in Australia right now. You can look it up. Look it up, right? You can look it up. CDSs in Australia. There's some images and stuff there. You know, we're getting very close to the 2000. We're getting very close to the 2008 bubble, which was in America, but we also had markets also pulled back in Australia as well too. But if you think about this, guys, for a minute, if you think about, especially in you know, if you look at especially Sydney and New South Wales in itself, really, that they had such an extraordinary move to the high side in the property market, and the property market to me is still really overvalued. And when we're talking overvalued, is that there's not a lot of people that can afford the prices of these properties. When you're talking income to property valuation, you know, you literally need 2 really good incomes to buy an okay house, and that's just ridiculous. Absolutely ridiculous. So we've in the last 3 or 4 years, skyrocket prices in New South Wales, especially, have been made there. I reckon the Sydney market's going to get hit the hardest over the next couple of years. You know, you have that. You have, obviously, as I was talking about before, you have obviously big banks staying short in this market. You have China, which is just, as you know, China is very connected to Australia itself. But not on top of that, not on top of all that, I'm not sure if you know, but the auto industry is in big trouble. What I mean by that? Well, you remember back before in 2008, the subprime crisis? Or what is that? Subprime just simply means that the banks were just just giving home loans to anyone. And obviously they couldn't afford to pay for it, so therefore everything collapsed. So did the banks, right? So that's actually what happened in the real estate market. Now that's being regulated. Now what's actually happening now is the auto industry, the car industry. The sales in America have been skyrocketed, but guess the reason why? Because they're doing the exact same thing as they did with the property market. They're actually just giving these cars out to anyone, and just basically giving these cars out. They say record car sales. Yeah, it's record car sales because everyone's getting a car loan over there because it's not regulated right now. So that's the industry they can push up. So, and what I was told is that there's a good percentage of these people that are more than 2 months behind. These 2 months behind the payments of these cars. So there's a lot of things out there, guys, that's just not right in the market, more than I can even explain on this video as well too. But I'm just showing you guys that the auto industry, oil, there's a lot of things, guys, that's really weighing on this market, and something's going to crack. And you watch, this market is going to get hammered this year. Hey, it's John Howell here, and thanks so much for watching my video. You see, I'm putting out daily videos and education on helping you learning the art of successful trading. So click on the subscribe button to keep up to date with every video I do. Also, check out my story video, $250,000 in debt, cancer, overweight, family passing away, lived on the streets, and more, and how I overcome it and now thriving through my life. This is here to motivate you, so click on that image to watch my video. And lastly, if you're struggling with your trading, then you need to see my latest webinar where I'm sharing with you an amazing strategy that allows you to generate an income without getting the direction right. So click on that image on this page to register for my next free webinar. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.